Welcome to Caching Waves. This is an Elliott Wave update for MATIC. Now in this video I'm going to be covering the macro counts and the current patterns I'm expecting to fill out moving forward. And we're going to start by deciphering what's happening here to help us pinpoint what to expect in the future. Now the most obvious wave to point out is this 5-wave move to the upside. Third wave extended as it should be, as well as a diagonal for our fifth right where it should be, as well as respecting our contracting trend line here to complete our fifth wave. So knowing this is a completed 5 waves, we have to look back at this, and what seems to be most appropriate is a wave 1 and 2, third wave to the top of the fifth here, and we're currently working on a larger 4th wave. Now I have a couple different options. This is the most immediate bullish one without making new lows, and it's hanging on pretty much by a thread. So we're going to be paying attention to this one in the bullish scenario. And what that is a triangle, and we have basically another year at least to finish this up. So think of basically getting stuck kind of like XRP. Unfortunately, we had this as a triangle to begin with. I warned about this very early on. This was a potential triangle, but we didn't get that follow through we were expecting. You can go back and check my videos. I called this as a potential top and to be very careful here as this was breaking to the upside. I did not like the pattern filling out, and I gave this as an option. But you're welcome to go back and check those. But as of right now, I don't expect any quick upside without dragging out and kind of like XRP is. The potential here is good once we get a completed E wave, because you can see we are in the 4th wave area. We have come just shy of the 382 retracement of this, the beginning of 1 to the end of wave 5, which is right here at 29.1 cent. So that's looking good for the triangle potential, but this triangle becomes invalid as soon as we break this low at 31.7 cents. So it's hanging on kind of by a thread. Now I'm not too concerned about the deepness of this, because C waves within triangles tend to have the deepest retracements, and if it doesn't, then D waves do. So in triangle terms, this is fine. We just can't break that level, right? And there are trade options obviously available in this wave. So if we get a nice clean ABC to the upside, you can probably trade that C wave. You're looking at, still potentially a 90 to 100% move. You just got to be aware of where to take profit. So in this scenario, I have a W off the X here. Target for that is 42.1 cent for a potential pivot before we get our D wave. And we're coming pretty close to that soon. So we're going to be paying attention for that for a potential trade setup, something like this. I might even get the 1, 2, and try and get the 3rd wave on the micro at the bottom, but I'll be tracking this along the way, so no concerns there. So this is our first potential scenario. There's quite a few. Now, the immediate bearish ones is a triangle to the downside. So there's always multiple scenarios happening, right? You got to pay attention to the levels and what's happening at those potential pivot areas and what sort of reaction we're getting. This is a real-time analysis. Anybody that says they know where this is going, they don't have a clue. I don't have a clue, but I know what's possible. That's the important thing about tracking these. So in this scenario, we have a W, a triangle X wave, and a Y to the downside. This could turn into a barrier triangle. If we do just reject at this low here, we'll have to wait and see. The good side for this is in both triangle scenarios, we should get similar patterns tracing out, right? Similar pivot areas. It's just the labeling is different. And eventually once we have the E wave in, can't do it now, but once we have the E wave in, wherever it is, we'd be looking for that 1-to-1 extension for Y equaling W. And we have a lot of room here before invalidation, where invalidation would just be obviously the top of wave 1. So there's a lot of room for our pattern to fill out before this becomes invalidated. Obviously focusing on the lower time frames to actually take trades in this. Okay, so that's scenario 2, bearish. And here's our other option. I'd actually prefer this one. This is where we most likely come down to between 19.8 cents and 16.5 cents. But the nice thing about this is it would finish up quicker. That's what I prefer. I don't want a sideways triangle for the next year, right? I'd prefer us come down here and then we can recover very quickly. And timeline for that, this is just guidelines, is around end of September, early October. I'll show you how I got that. So I have this as a 3-wave move, as a W wave. We have our X wave to the upside, and this is our second 3-wave move to the downside, most likely as a flat 335. We'll see how this pans out, but this is ideally what you want if you are a MATIC holder, just to be done with the correction quicker rather than later. Then we can push for upside. Now I'll show you how I got those targets. First I took our W wave off our X, targeted the 1-to-1, which is at 16.5 cents, and the 1.618 of this wave off this wave is 19.8 cents. So we do have some confluence there, and that's right past the 382, right above the 50 where we'd expect a fourth wave to be. Other thing I did is I switched to linear scale. Kind of got to switch between just to get an idea. That's why I have this green box, and the 1-to-1 this wave off this wave is 21.5 cents on linear. So that's why I have my zone there, and the 1-to-1 extension in time, this wave off our X for our Y wave again is October. So that's why I'm looking in that zone area. Now there is one more, which I hope does not happen, because it will be quite frustrating. I haven't drawn this one up, but that is if this level actually holds above this pivot. Let me mark that down for you. If this pivots to the upside from this area, doesn't break this low, and starts pushing for highs up here, that is not a completed correction. This is not impulsive, although it would be an okay trade when it is available. But say we hold this level, what that would actually end up being is a larger X wave. All that would end up giving us is we have our A, 3-wave B, and our C to the upside. And then we'd still need our connecting leg. So this would all be corrective in this zone. We'd be looking for a matching wave to the downside. Now, obviously that's tradable. It still would be good upside potential because we'd expect to break this wave, the A wave high. So you'd still look for 300-400%. But just know your upside is limited before we'd get most likely a crash to the downside. So this is the trouble when you're playing with 3-wave patterns. Until they become close to complete, they're very, very difficult to read. But we have our ideas of what we're expecting to happen. Again, that's our barrier triangle to the downside potential, triangle to the upside. I hope we don't get this. Again, this would take us into next year just grinding sideways. Think XRP, and ideally I'd want us to either come down now, complete in our WXY, and then we can attempt upside, or get the C wave, then dump. All right, guys, it's pretty clear to me that we are in a fourth wave, most likely. I hope that's clear to you guys, especially with this 5-wave move here. That's very clear. It just depends. The question is, how do we finish this fourth wave? Obviously, I prefer this. Just come down, complete, and then we can attempt all-time highs next year. That's what I want. Drop us down to 20 cents-ish, and let's get this over with, right? Everything else just grinds out in time. All right, guys, so that's it for MATIC. I will be tracking this on the smaller time frames over the next couple videos, looking for an entry here, and depending what we get in this area. So if you want to follow along, make sure to like and subscribe, and hit the bell if you want it right away, so you get immediate access to that video. And that's it for this one. I'll see you guys on the next one.